What's up and welcome, ladies and gents. Jay Do
And Jonah.
here from the Banking Bros. We're having code cracking cash flow conversations and this cash coaching hour. It is Thursday, noon on the East Coast. Shout out to wherever you are out there. Throw it in the chat. Let us know, even if you're watching a replay. For those of you who are on Facebook, we thank you for joining our Cash Compound community or our Infinite Bankers page. On Infinite Bankers, you're going to see the questions, the concerns, and even the community from the people who want to know what's going on. How do I get my money right in 2025? That's something I haven't heard in a little while. Getting your money right. Jonah, on a scale of 1 to 100, how right is your money?
It's fine. I'm 50. You're 55.
If I had a 55 in high school, I would be getting an F, sir.
That is true. That is true, but you took me off guard because I was thinking about that get my money right situation, and that was a big saying on social media for a while in there. When I get my money right, I'll do X.
I think getting your money right, it goes way back. So I'm going to pose that question.
Social media days, it was definitely there.
Social media days, are those days behind us?
No, it's still up and running. Let me tell you, they are going crazy.
Yep, we got TikTok back, everybody. Now we are on TikTok in two places: the Cash Compound and the Banking Bros. And if you find us there, drop us a comment in one of our thousands of different posts. There is lots of topics around your money, your wealth, your family, your mindset. That's what I'm working on right now. So let's talk about the way you think. And before we get into that, I want to introduce our team of coaches here at the Cash Compound. We have several different coaches, and what they do is they help people with conversations around cash flow.
Sure do.
We think it's all about starting with a fundamental tool and basic concept of understanding how to save and spend money at the same time. Get your banking right, become your own banker. And these are what these subject matter experts specialize in. First off, we got Sean King. Welcome back, Sean King, Legacy Life and Retirement. Tell us about yourself and good morning.
What's up, guys? Good morning. Happy Thursday. Sean King here, back again. Looking forward to sharing some great information with you guys today. I am based out of Pensacola, Florida. I'm a father, a new father, starting last year. My son just turned 1.
Hey,
married, and just trying to figure out how to balance this all and still help awesome people like you learn how to take back control of your money. So happy to be here again with you guys.
Yes, sir. Good morning. I love it. And we have Kathy LeJour. Kathy LeJour coming to the only 10 I see, as they say.
Hey, good morning.
Hey, all right. Tell us about yourself, Kathy.
Good morning. I am with Integrated Insurance Group out of Old Hickory, Tennessee. It's like 15 minutes north of Nashville. I've been practicing infinite banking about 2 years now. Been in the insurance industry 20 plus something years. So when I got in, was excited, didn't know very much, started having conversations and understanding how it works, and been practicing it and looking to help other people. So
love it.
I love it.
We are glad that you are here. It's interesting that you mentioned a background in insurance, and property and casualty, I think, is your bread and butter for the last 20 years.
we got to say what's up to Mimi, though. Mimi says, hey, everybody.
Hey, Mimi,
Mimi.
what's up? Mimi's joining us on the Banking Bros channel on YouTube. Remember, you can subscribe to our long form content there and our visual content. Maybe you're listening to us right now and you're busy doing something, but you'd like to see some of these numbers. You'd like to see some of this policy construction. You'd like to see us. I don't know if I can trust this cat. Well, go to YouTube. We got lots of information for you over there. Jonah, I was saying that, Kathy has a background in property and casualty insurance, but so do you.
That's you got to say auto and home insurance for all those people who don't have insurance backgrounds. People don't know what property and casualty is.
Oh, okay.
Did you know what casualty insurance is before?
Before I knew things, I didn't know things.
Yeah, exactly. Nobody knows what that is.
No, I'm saying before I knew how to read, I didn't know how to read.
Sure. But anyway, that is auto and home insurance. And yeah, I did used to do a little auto and home insurance myself. And it's fine. People shop it too much for me, in my opinion. right? People, all they want is the lowest price, and so they don't really care about you. So even if you help them and you're like, no, seriously, you need to upgrade this or get a little bit more coverage here. We can add this. It'll give you a discount. We can do all that stuff. And they're like, oh, thank you. And then 6 months later, peace.
Yep.
I'll stay
for $1. They'll leave you for $1.
Yep.
Okay,
Exactly
so
it.
Kathy, here's my question for you then. With what we're talking about most of the time, which is this fundamental tool for banking, but it's using insurance. Give us a generic, everybody can understand. Apparently, I'm getting too technical for you guys today. And Jonah wants us to make sure that the average person understands, well, what's the difference? What's the difference in the insurance we're talking about here for this idea of infinite banking? It's right there on the screen. And auto, home, property, and casualty insurance. Give us some differences here. So the average new person would go, oh, I didn't even know that there was these options. What's the difference?
And also, what's up, Nelson? We appreciate
Hey,
you,
Nelson.
man.
Nelson.
So one thing that kind of stuck out with me is when you're looking at property and casualty, or your homes and autos, you're looking at when you're going to have an accident. When is something going to occur? It's not a definite. And with infinite banking or the whole life insurance, it's if on the other side. I'm sorry.
If. Okay, yeah.
If. And then on the life insurance, on the whole life side of things is when, because we're all going to die. Let's just be honest. We're all going to expire. We're all going to. So that's one difference in property and casualty and the whole life world, or life insurance world.
Yep.
Okay. Very good.
I was even going to drop one more bit of useless knowledge for all those who are watching. It's not even property and casualty. That's still not the technical.
It's not?
No, still not. Is home insurance, Kathy? Is that a HO4? Is that what home insurance is?
HO4 is renters. So
HO4 is renters.
Yeah.
What's home?
So
HO3?
home is HO5 or
HO5.
Yeah.
That's what I'm trying to say. You got to say home insurance so people know what you're talking about. Fire insurance even threw me. I didn't realize that it was called fire insurance for a while in there. That didn't make sense to me either. Like lots of things can catch fire. Yeah.
Dwelling fire. Yeah.
Dwelling.
What in the world?
Okay. So Kathy, here's another question here. The difference between one of the differences when we talk about people getting into this infinite banking idea, we're all doing it. We practice this personally in our lives. We store money in these whole life insurance policies, and we like to store as much as we can. So we actually like to put in lots of premium. But I have a feeling that lots of premium is not what people are normally coming to a property casualty H2O agent like yourself, whatever it's supposed to be out there. There is no diggity and no doubt that these folks want to have as minimal premiums as possible.
That's right.
Is it true? And how would you explain? Well, I'm a type of person who's trying to put as much premium in these infinite banking policies as possible. Help us with that difference.
Well, when you think about infinite banking, you're thinking about becoming your own banker, right? So you don't want to have a bank that's not growing a lot of money. You want to have that leverage where you could be able to get yourself out of debt, purchase a home, whatever you want. You have that freedom to do so. So it's key to put in as much money, just like if you're putting it in a bank, or, you want to continue to save, but save in your own bank so you can have that leverage to grow and continue to grow. So I don't know if I answered your question, but I just wanted to emphasize that because you had asked or put out there, why would someone want to put in the minimal or put in minimal, not put in a whole lot? So that would be my recommendation. You would want to put in as much as you can. Use it to pay for everything, for gas, for your rent. So why wouldn't you want to put in everything you have?
Sean, what were you saying there?
Yeah. So Kathy, when we're talking about this insurance, the property and casualty, I think a great question to ask is, when people are making those payments to you guys for the coverage that you're offering them, how much of that money do they get to use ever at any point in time? Like, I'm paying this money to you for the insurance on my home or my car or whatever we're insuring. How much of that do I get to use?
Well, you don't get to use any of it.
Oh.
So you're not using any of the money that you're paying for your premium. You're paying for your policy, right?
Mhm.
So again, it's if you ever have an accident, the insurance company will pay for the damages, depending on if you have the right coverages in place.
Right.
So there's a lot of different,
You see how she leaned in to
that's
say
a
that?
bi-
If you
well-
have the, she went into sport mode.
Well,
She
that's
leaned forward.
that's-
If you got the right one.
That's because that if is big over
Yeah.
there with other insurance. I mean, how many of you guys listening or even watching the replay, right? Leave it in the comments here. You've gotten into an incident where you thought the insurance should take care of it, and then you didn't have the right option on the insurance that was supposed to take care of it. Right. And then all of a sudden you're like, this recently happened to me. Okay. So, I'm an insurance nerd. I currently have an insurance policy if I get hurt. Okay. It's accident. I forget the full
You
name.
think you're a footballer? You think you're playing for Real
I have
Madrid?
an insurance policy if I get hurt. I got hurt. My ankle is hurting. I go to the doctor. You see what I'm saying? I go to the doctor. I turn in the insurance claim. I am hurt. I went to the doctor. They charged me money. They say I need to get fixed. And I get a letter back that says, you had a week to go to the doctor. You went in 10 days. We're not doing it. So that's what I'm trying to say. The if and depending is humongous. And that's one of the things that I love most about whole life insurance and infinite banking. No ifs. It's when you pass away. Everyone passes away. I have not been asked in a few years what happens if you don't die.
Oh, goodness. Now, Sean, did you know about that? Everyone is set to expire. That's how Kathy put it. And I agree with that. But there have been two different times. I believe. Was it you both times or did I get one?
I think they were both me.
Okay. I try not to take these calls where someone actually asked, so what happens if I don't die? Sean, help us understand some of the guarantees in whole life insurance. There's guarantees about money you put in. There's guarantees about payouts. There's guarantees and clauses about loan. Walk us through some of that here because last I checked, I'm guaranteed to die.
Yeah, you got to go.
Yeah, so guarantees. Well, the first guarantee is that you're going to die. So I don't know who those people are, but maybe I want to get on the diet, whatever plan they're doing where I'm never going to die. That I don't know if that actually seems that good. But when we're talking about guarantees with your life insurance policy, the guarantee is if you pay, they pay. As long as I keep paying, they're going to pay me up until whatever my policy structure says. If it's stopping paying at 65, if it's paying till 121, wherever it is, they pay, or I pay, they pay. The other guarantee is the guaranteed interest that I'm going to earn. My policy guarantees me that it's going to grow by a certain percentage every year, a certain amount every year. And that's in the contract. I think a lot of people get confused about that portion. Nope. We say, don't trust us. Look at the paperwork. It's all in the contract. Remember, this is a contractual agreement between you and the insurance company. The other guarantee is I can get access to my money. If I've got cash value in my policy, no questions. Well, there are questions. They're going to ask me who I am and make sure I'm not somebody else trying to steal my money.
Right.
I can get access to that money with very minimal hurdles to get over very quickly. There's so many guarantees. It's guaranteed not to go down. It's guaranteed.
That's big. It's not an investment, is what you're saying.
Yeah, no investments here. We like very minimal risk when talking about these type of policies. What you do with your money on the outside is completely up to you. But when we're talking about the policies, we like as little risk as we can possibly get, which is why we store the majority of our wealth here before dispersing it elsewhere. So guaranteed not to go down, backwards, whatever you want to call it. It's guaranteed that if I want to access that money through a loan, that'll be tax-free because loans aren't taxed in the US. So I can get my hands on money tax-free. God, let's see what else. There's so many.
I've got one more.
What you got for me?
There is a guarantee that the premium to have this policy does not rise in
Wow.
cost.
That's a big deal. I don't need stuff
Yeah.
getting more expensive as I get older,
I
honestly.
like less expensive. It can get,
Right.
everything's getting more expensive. If I can get this to get less expensive,
Well, what's interesting about that, sometimes in the policy structures that you will see on our saveandspendsystem.com, you'll actually see, if you're savvy and you're paying attention, not just running on the treadmill, but looking, and we encourage that, you will actually see premiums go from X down to Y. But I want to introduce another idea around the policy does not cost more. So yes, the way we structure policies for custom contracts, Sean said that this is a contractual deal here. This is you can call a life insurance policy. You can call it a contract if you want. We pay, they pay. But there is a structure in our custom contracts where your policy doesn't actually need all the money that you started with. 100% that's there. But Nelson Nash, the founder and developer, I like that a little bit better. The developer of the infinite banking concept. I'm going to start using that word. This was an old man, God rest his soul, 5 years ago. He said, well, with inflation, you guys realize
It is going down.
that it is going down.
Yeah, I was about to say that, because if the price is going to stay the same forever and the rest of the world's prices, inflation is going to go up, but I've got something that's prices staying the same, its price is going down.
The price is actually going down because of that. So
I mean, think about it with milk, right? If the price of milk today at $3 a gallon, whatever it is, forgive me, I don't go to the grocery store, so the comment's about to eat me up or something. If it's $4 or $5, but I don't go. If the price of milk is $3 today, and 20 years, 30 years, 40 years, 50 years from now, you guys have to pay the new price of milk.
Unless you want to drink that old milk.
Right, but I've still got a $3 milk at whatever grocery store that I am going to. Like, with inflation, my price is low, folks. My price is low. Right. And that's what makes it really cool. So here, I thought
really quick.
Yeah.
When I'm buying that gallon of milk in the future, am I getting more milk?
A gallon is a gallon.
Gallon's a gallon.
Don't change.
Right?
But when I pay my price for my premium in the future, am I getting more death benefit?
You are.
You are.
These custom contracts, Sean, as you know, as you led the witness, as you played dumb, we know that death benefit actually rises in these types of contracts for a couple of reasons. One is because of the custom setup. Another is because dividends. We only use mutual companies. Sean, take it away. Tell us about what a mutual company adds to your policy when it's constructed the proper way.
I know what they add.
Cha-ching. Yeah, so we only do these policies, construct these policies with mutually owned life insurance companies. There's a lot of life insurance companies out there. Very few of them are mutually owned these days. I'm talking about a small handful. So you got to work with somebody that knows what they're doing when you talk about this. But when companies there's a lot of background to this, actuarial stuff, all this stuff that we don't want to get into. But every year, these mutual companies, because you are a policy holder, that means you are a part owner of the company. So when the company does well, they always make sure they do well. And these companies we work with have been doing well for 100+ years. They pay out what's called a dividend to their policy owners. That would normally be to stockholders, but we're not a stock company. We're talking about mutual companies. So they pay out these dividends to us as policyholders. And we who practice infinite banking, the majority of the time, like to take those dividends and put them back into cup one of our cups, our 3-cup setup here, which is the premium deposit cup. We take that money, we say, hey, you know what? Just toss it on top of my extra money in there already. And that does a couple things. That always buys us more death benefit. It gives us access to more cash value, and it gives us a bigger dividend in the future. So
sure does.
One more time, Jonah.
There it is. You know what? That's funny that you mentioned that. This actually is going to take me into a conversation that I had earlier this week with someone. So I want to share just a little bit of our infinite banking insights. All right, so I've got to share. Earlier this week, I was on the phone with a gentleman. He calls and he says, listen, I watched someone else's YouTube video and they're talking about their policy breaks even. Their policy breaks even overall in the 5th or 6th year. They actually made a definitive statement in this video. He said, if you've got a policy that does not break even in the 5th or 6th year, you need to look elsewhere. You need to do something else. Your people don't know what they're doing, right? So he goes and takes a look at his policy contract and he calls and he says, Jonah, I don't think this thing's breaking even in the 5th or 6th year. What's going on? So we get on the phone, we talk for a little bit, and we ended up, I said, you know what you need to do? You need to send me the video that you watched. That's in your YouTube history. Let me show you how to get to your YouTube history if you don't know, because I literally want the YouTube video that you watched, because what I think is happening is the people in the video are talking about the non-guaranteed fixtures, which I can talk about. But as we just talked about on our channel here, our live, we like to focus on what's guaranteed to you, actually, right?
Yeah.
And so we went back and forth for a little bit. He's a great guy. He's been with us for a year, 2 years. He's got a policy. He's using it appropriately. So all good. He sends me the video. Actually, he sent me an email with the link to the video. But first line of the video was, you were right. They were talking about what was not guaranteed. And I said, oh, well, yeah, I mean, I knew that going in. But then here's what I thought was fun. The not guaranteed section of your policy illustration is where all those dividends come in. Right. Like we just talked about. Now we want to use mutual companies. I want dividends. There's no way in the world, if I had to choose between a stock company and a mutual company, that I'm going to pick the stock company for a policy like this. In fact, I use a mutually owned insurance company for a couple other of my insurances, like my car insurance and stuff. I think you do too.
Yeah, 100%. United States Automobile Association.
Right. I use USAA for some of my other insurances, and I surely love getting that email once a year that says, congratulations, here's your dividend. And over at USAA, I have them take it directly off of my car insurance
take it
bill.
off what I have to pay.
Yeah, take it directly off my bill.
Yeah.
So I know about dividends. I think a lot of people out there listening know about dividends, because a lot of people like to invest in dividend stocks or ETFs.
Or they have mutually owned car insurance.
Exactly.
They have
so they know about these dividends.
Yeah.
But what's key about the dividends is how we like to explain it sometimes is it's just the bonus. It's not what's guaranteed to you contractually. You cannot take the paperwork to the bank and say, look at what they're supposed to do 5 and 10 years from now. Can't do that. You can take the paperwork to the bank and say, look what they're guaranteed to do. And now I've got some collateral to leverage. But the non-guaranteed side, the dividends are just the bonuses. So you want to use a company like we do that's got a big track record, 100 years, 120 years, 140-year track record of giving out the bonuses. But it is really, really, really important to understand that only what's guaranteed is what's guaranteed, right? The bonuses are extra on top of. And so that's an important thing to understand. There's a lot of people out there these days that are making videos on the internet that are saying, hey, when you get an infinite banking policy, you should expect 5, 6, 7% year over year. And they're adding in the bonus, the dividends, when they say those numbers.
Can be a little misleading is what we're saying.
It can be.
Yeah.
I'm not saying I don't like their videos. I'm saying you need to understand what's guaranteed and what's actually extra and bonus on top.
All right. So love it. All right, Jonah, hit me with another segment here. I got a little something for the people.
All right.
Coming up right now. Okay, I've got a little chit chat for everybody here, and we'll ask for responses from Kathy and Sean, our coaches. But we want to remind you that if you want to have a little chit chat with one of our coaches or us, we're available for that. We have free cash consultations. What we're calling a phone call. Let's do a phone call, maybe a Zoom, maybe a Google Meet, and let's walk and talk through your questions about how you can get started with this process. Remember, if you can't find the link here, there, or anywhere on this recording or live, if you're here with us right now, you want to go to saveandspendsystem.com, and we'll talk to you very soon. We got a video for you to watch, and then get on our calendar. It's going to be great. So here's the chit chat, Jonah. What I had a conversation with a couple about this weekend was very interesting after they decided they wanted to do this process.
All right, I'm ready.
They're local. We're in South Carolina, by the way, where there's been a lot of P&C and H2O claims because of these crazy hurricanes. We had some snow.
Yeah.
Okay, these people live locally. They saw us live in living color just a month ago. They wanted to follow up. And they said, I'm a business owner, lawn care. She, I think, works at a hospital. We, 2 kids, 12 and 9, I believe. Okay, we got to protect the wealthy, so we're not going to tell you any more about them. But they were a great couple, and we talked for 2 hours. Remember, that's a free call. 2 hours. I'm giving them all sorts of time, letting them ask their questions.
We got to let Johnny Doe know what you were talking about. He's asking if we are a stock and investment channel.
Oh, got it. Johnny Doe, appreciate you being here. I know it's not your real name, but we are glad whoever is behind that is really here. We are talking about code cracking cash flow. We're going to talk about systems that guarantee cash flow now and forever. If you ain't old enough to know what I'm saying.
What Kanye say? Forever, ever? Forever?
Okay.
Yeah,
There we go. Okay. So, Johnny, we are not talking about stocks and investments. Particularly, we're going to have a foundation with a different type of guaranteed money product, and that comes from insurance companies. Appreciate that you are here. Please subscribe and stick around. Ask us another. So here's the point of this conversation. In our chit-chat back and forth on this free call for 2 hours, I challenged them with this idea that they were going to potentially start 1, maybe 2, maybe 4 infinite banking policies for their cash flow, Johnny Doe, and their future. And they wanted to talk to me out of the gate about investments, just like Johnny did.
Yep.
Okay, what are we going to invest in? We want the money that we will have liquid in these contracts to be able to go and grow somewhere else. I said, awesome. Here's what I want to challenge you with first is where should we be keeping your emergency fund? Before you get into this idea of investment, now that you're going to switch from what you've been doing, you have a new train of thought. Neural pathways are saying, wow, I should be doing this banking thing. I said, are we going to leverage all of the cash flow for an investment, whatever it might be? Or where should you keep your emergency fund? Okay, so I have a question for Miss Kathy Lejour. Give us your response to that line of thinking. Where should you be keeping your emergency fund and why? Do you think emergency fund is important? Do you have one? Tell us the real story, Kathy.
Well, first, emergency funds are necessary, especially the world we're living in, especially the guy, there in South Carolina where you guys, the hurricanes. And I'm sure the people that did not have a emergency fund, they probably struggled. So 1, you don't keep it up underneath your like your old school, your grandparents underneath your blanket.
Because it got flooded.
Right. Mm-hmm. No, but normally you would want to keep it in the bank, and that's your bank, as in, my bank. I would want to keep at least 6 months, a year. Everybody have their own individual, what a safe net would be for them. But you would want to have 6 months or whatever, a year. And again, it varies person to person and how they design their safety net. But it is definitely important to have a safe haven.
There we go. Sean, here's my question. Why? If you agree with Kathy, tell us why we would keep an emergency fund in life insurance. Can you give 1, 2, 3? I want to know. Why would we put the money there? That's what I was challenging and posing this family with. And they started to, their eyebrows and, forehead started to move. And they said, wait, why would we do it? Give us the benefits.
So first things first, that's where I keep my emergency fund. Number 1, I want to keep it somewhere safe. I want to make sure no matter what happens, my emergency fund is safe. Check.
So not underneath the
I
floorboards.
Don't want it washing away or burning down.
Right.
And you can get to it at any time too. Yeah.
Now banks will keep it safe though for you, Sean. Give me something else.
Banks will keep it safe. That's one. Give us another one.
Well, I agree. There was a few banks a few years ago. Now
Silicon Valley Bank,
and 2 other ones that went down. But General, Wells, and Chase are going to keep it safe. So you got to give me something else. Give me something.
I want, like Kathy just said, I want it to be easily accessible. I don't care if I'm talking about $5,000 emergency or a $500,000 emergency. So you said banks will keep my money safe, but will banks let me go in there and get my $500,000 out if I have an emergency 3 business days?
500 or 5,000, sure. If you've got a bunch of money, the answer is
Not 500,000. That's what you're saying.
Yeah, the answer is definitely no. You cannot get that out from a bank that quickly. They got to call every branch. You got to talk to 3 different people and go to 3 different branches if you got that much money and trying to get it out.
LL Cool J comes out with a SWAT team.
Yeah, they're not going to let you. They're not letting you get that. But okay.
All right.
So there's a lot of reasons, but the last one I'll give you is if that emergency pops up and I take that money from my bank under my mattress, wherever it may be, and I go and I spend it to cover myself for that emergency, is that money ever making me any more money again?
Interesting.
No.
Explain it. But explain it.
It's not.
Where are you getting? Where are you going with that?
Because I took this money out of my, we'll just call it Chase Bank, because I had an emergency and I went and spent it because I needed a new transmission in my car so I could get to work and keep making my money.
Okay.
That money that I took out of Chase Bank now is gone. I paid for the transmission, little transaction there. That's how it goes. That money's never earning for me again. With my infinite banking policy, you guys got to remember that we're never taking our money out. We're loaning money from the insurance company using OPM, other people's money from their general fund. Our fund, again, I keep referencing back to the 3-cup setup. If you haven't watched it, be sure to check it out. Our money that we put in is in cup number 1, the premium deposit cup, which means when I take a loan and I'm taking someone else's money to go use, my money stays in cup 1, earning continuous compounding interest for the rest of my life. So I'm still earning on my money that's protected the entire time I'm dealing with my emergency that I just went and paid for. You're not going to get that.
Interesting. Y'all need to, do we have a sound effect for that message? We need that from the Wayans Brothers movie for some people. Okay, we'll take it from the kids. Okay, little, that was, what do you call that one? R. Kelly?
Yeah.
Okay.
That's why we can't. We're about to get banned off of YouTube.
Oh, no. We good. So, ladies and gentlemen, we have a reason to put my chit chat with them was when you're starting this infinite banking journey, becoming your own banker, you might get excited. Eyes bigger than your stomach. My dad used to say, when you're going to eat some food. And what I want to make sure is you understand is maybe you need to start with your safety net first and just think, where should you keep your cash? Should you keep it in an environment with guarantees of growth, guarantees of safety, guarantees of liquidity, and the ability to still have your money earn when you borrow against it for your emergencies? Emergencies are coming, Jonah.
They sure are.
Emergencies are coming, but I think that you should keep it inside.
To Sean's point here, I talked to 2 ladies recently. I've talked to them 2 or 3 or 4 times, actually, because they're trying to figure this all out, right? And here's what's key. This lady told me how tight her budget was. And
these aren't the sisters, right? I just realized I got to call somebody back.
They're sister and sister-in-law. But anyway, this lady went through her whole budget with me, okay? And her budget's tight. Like tight. Like, hey, we don't have a lot of extra money.
Okay.
It's tight. And here's the problem. We've got student loans that the payment is crazy high. We need it out of here. And a certain section of the student loans are coming due in May or something. The forbearance is wearing off, whatever the correct terms are. And I know I'm getting another payment come May. We have to do something now.
Ooh.
We cannot afford this type thing. So we started to go through their accounts. Where is your money currently?
Yeah.
Is it here? Is it here? I'm literally listing accounts. Do you have a Roth IRA? Do you have a traditional IRA? Do you have a 401k? Do you have a 529? Do you have a 403b? Do you have stocks? Do you have me? Where is your money if you have any? And come to find out, she's got about $55,000 or so in a 401k. He's got about $110,000 or so in a 401k. And exactly to your point, Sean, they need that money now. Budget is too tight. We literally cannot afford this. We need the money now, but we put it in the wrong spot. So those things that you just mentioned, is it safe? No, in the 401k.
No.
I literally went to the .gov website and I just read a few bullet points. I shared my screen. I read a few bullet points, and they were like, you know how people do that? You know, people are like, can't believe it. You know what I mean? And I'm like, not safe. Can I get to it at any time? We know the answer to that one.
You can't
Not
get to
without
well. You can
taxes
you
and
can
penalties.
try to leverage or
Right?
tax.
So we looked up the withdrawal.
Right.
We did
Okay.
everything
Yep.
for these people, and they've decided exactly what you talked about, Sean. They said, no, we need that money now more than we need it later. But I said, what's so important about that is we're not just foregoing retirement. If you guys want to pull this out, your decision if you want to, and if you do that, we're not just foregoing it. We're doing both. We're doing two at once, two at the same time, right? And we're going to free up this money. And so she's excited to get started. Now, again, took some time to walk her through it because it was brand new. She doesn't know all the things that I know looking at the situation. She doesn't, I have to walk her through it step by step. We have to say, you know, what's important to you? Is safety important? Is security important? Is liquidity important? Is taxes? What's actually important? And then she's coming to the decision. That's why it was so many phone calls, right? It was like 3 phone calls or so, coming to the decision to go, no, I have to do this. There's no, this is the option that I have to use. There's nothing else that's going to work.
So remember, if
situation.
you want that type of conversation, ladies and gentlemen, you can get it. That's what we do. For the last 7 years here, the banking bros at the Cash Compound and our coaching staff, we have walked and talked people through conversations just like that with their specific scenarios and help them to understand how do we get into that cash flow performance space in our life today or tomorrow, whatever it is that is keeping you up at night or making you work harder or keeping you from being able to have those extra dollars you want so you can get that Paramount Plus right now. Whatever it is, we want to help you with that cash flow.
I think Kathy's going to share something with us. Kathy, why don't you give us a little bit of some infinite banking insight?
I know that you have created a topic of insight for people here because many people have a conundrum in their mind. We've talked about borrowing money several times, and some people are a little confused about that. What's the insight that you can give us, and what's the frequently asked question that you can clear up?
Well, people say, the question is, are you really borrowing your own money? And the answer is no, you're not really borrowing your money. You're because you're not borrowing your own money, should say. You're leveraging it. So, and this is how it works. So your premiums, if you follow the 3-cup system or the demonstration, the premium, the red cup, you're taking, that's your money, right? So you're taking the premium you pay into your whole life insurance policy and like deposits into a private banking system, and then you create the blue cup. That's the death benefit. That's what you're paying for, the death benefit. And then subsequently the green cup, that cash value, is where the reserves are. That's what you have access to. So you're borrowing against the policy. So when you take out a loan and you're not withdrawing the money you've paid into, right? And instead you're borrowing against the cash value. And the death benefit that the insurance company has guaranteed, that means your cash value will remain intact. It continues to grow as you hadn't taken the loan. And then the loan comes from the insurance company using your cash value as the collateral. So if you're truly taking out your own money, that would be a withdrawal. You're not a loan. So withdrawals are possible and in certain cases, but it may or may not make sense. But however, the loans that are usually better choice because they preserve the growth of your cash value and giving you that access to the liquidity.
I love that. Well done for that insight, Kathy. I know many people out there have that question, and they have been taught by other folks an incorrect way of thinking about those. Okay. Those loans are actually leveraging against your policy. Your policy, this money they owe you, and if guaranteed, becomes the collateral. I like that word. So, Kathy, thank you for that. Many people assume that if you put money in and are taking money out, it must be the money I gave them.
No.
Right.
And if it were, that would be the
how
withdrawal.
so many things work.
That's how your 401k.
That's how
right?
basically anything else works, and that's why it's really confusing.
Borrowing against, or you're taking out principal. So how could it keep growing?
Yeah.
You know, things like that. So appreciate that. If you need help, throw it up there, Vincent. Okay, Vincent Price. Vincent Price. That's not Vincent Price. Y'all using fake names out here.
Who's Vincent Price?
Vincent Price is a famous actor. Artist?
I never heard of Vincent Price.
Vincent Price.
That's probably his real name.
Google it.
Vincent Price.
Google it right now.
Right. There can be more than one.
There's not more than one Vincent Price.
How?
Right here. This dude.
Vincent Price. That guy's old. 1911 is what Wikipedia says he was born in.
Now, Vincent Price is the one we all know. Vincent Price was the one.
We don't know Vincent Price.
At the end of Thriller. Darkness falls across the. That's his voice.
That Vincent Price?
That's Vincent Price.
All right. Well, we do know his voice.
He was on Scooby-Doo a couple times. Y'all remember?
Them and
Kathy remembers.
Kids. Anyway.
Okay. So, Vincent, if you need help, we're here for you, my friend. We won't do any more jokes about your name. What we will do is help you understand what we're talking about on a you and me level. A you and me level. We won't talk over your head. We want to help the common man understand cash flow and how it can be a guaranteed deal for you, income tax free and growing for the rest of your whole life through contracts with properly customized insurance policies. That's what we're going to do for you on that phone call. Remember, go to saveandspendsystem.com. We've thrown it up a couple of times, but if you go there, throw in your email for us and your phone number so we know where to find you. We've got a video for you to watch, and then come with your questions. We've got answers. Nothing to buy at all. Just a real life conversation with someone who's actually doing this. Kathy has an account that gets bigger every single day. Income tax free, liquid money that she can leverage without messing up her flow. Her cash flow is still going to be there. So we want to help you understand that same thing for you and yours. What if your whole family had a system like that, Vincent? We want to help everybody. Okay.
J-Do, quick point on what you guys were saying. I think that so many people, what they're missing is just having somebody to have these cash conversations with. Like, ask yourself right now, who are you talking to in your life about money? Who's giving you guidance or advice on these things? What books are you reading about money? Like, I think not enough. It's so taboo because not enough people talk about it with the family unit because it's kind of a weird conversation. So, you know, Vincent, shout out to you for coming on here and leaving a comment and saying, I need help. Like, that's all it takes. All we're here to do is help educate you, just like Jonah did with those people. If it takes 3 calls for us to walk you through what this could look like for you to help you get to where you want to go, then that's what it takes. We've all had many calls to help get us to where we're at. It takes what it takes, and we're going to meet you where you're at, but you got to be willing to have that conversation. So book yourself a call.
Shout out.
Be open-minded, and you know, because it's an unthought. You got to unthink what you thought, right? So a lot of people we think we know something, in all reality, you really don't. And so what you thought you knew, you really don't until someone educates you, like, you know, the coaches here, until you educate and they can relearn what they thought they knew.
I love that. You got to unthink what you thought. Mm-hmm. You got to unthink what you thought. Ladies and gentlemen, shout out to our Instagram channel. It's called The Banking Bros. If you're not there, get there. Follow us on Instagram. And if you need a DM from us, we can respond with links there. We have a plethora, an entire library of video links and resources that can be helpful to you, as well as if I'm the one in the DMs, I might be able to give you a voice memo response. So if you need to hear something really quick and you just have a one-off comment that you need clarification on, you saw somebody else's video, you're trying to figure something out we said that's still a little confusing, we can hit you up in the DMs, or we've got tons of posts.
Jeremiah, what you think about this comment from HM?
All right, can't do this in hoodies, but we've been doing it in hoodies. Right. Don't stop the bum rush. We have been here doing it. Do not interrupt the people who are doing it in hoodies right now.
Listen, when I saw the comment, I'm assuming he thinks we should dress a little bit more professionally. But the crazy part about that is the most successful, wealthy people I know dress like this.
because all the people who got A's in school work for them.
Right. I mean, realistically, I'm not trying to come at you. You're entitled to your opinion. You can say that you don't like my hoodie. That's fine. But I'm going, man, if I have to go into the office and sit in the guy in front of me that wears a suit all day, I don't get personal opinions, personal touch. I don't get that from those folks. I get the cookie cutter, that this is what you should and shouldn't do.
Point.
You know what I mean? I don't get anything personalized. And when I look at the people in my life that get 10 and 15 and 20 and 25 and upwards of that percentages on their money and their investments, who have the deals going on, who flip the houses, who can earn so quickly, who can earn they all look like this. They wear hoodies. They wear regular jeans. They drive regular cars. You see what I'm saying? It's interesting to me. But 100%. Anyway, that's just my 2 cents.
Now, Johnny says Mark Cuban dresses casual. Throw that up there. Yeah. And we've all seen him courtside at the Mavericks. But he wears nice clothes on Shark Tank.
Yeah.
But he's been, courtside doing his thing. If you're into the sports or something, you've seen him. What's interesting to me about what you said, Jonah, is I ran into there was a homecoming event at my high school this past weekend. I go every year. Okay. And one of my buddies came out the gate in school. We used to be roommates back before we had families. He got that big job. He got that good job.
Okay.
Back in the day.
Yep.
Right out of school. He was in aviation. Okay. And he became a pilot.
All right.
Like he's flying around dudes who make Walmarts and Lowe's and stuff like that. Okay.
Yep.
And now he works for the Boeings and the Lockheeds.
Okay.
Okay.
The government contract
big
people,
and he's
so
over
they got
projects,
all the money.
whatever that means.
Yeah.
Here's what I thought is really crazy. And like you said, it's not about me, but I thought every time I see him, my mind goes back to when we were 21. Man, he got one of them good jobs, And he was making back at that time. I think, that thing paying him like $150.
He was getting $150 when everyone else was making $30.
Yeah.
Right. Yep.
And here's what I realize now. Wait,
$150.
I make more than that.
$150.
I make more than that in a hoodie. You know what I'm saying? But every time I see him, my brain tells me he's the one with the money. I'm like, I make more than that.
Yep.
It's not about me. I'm just saying, like, we've got to rethink our thinking and unthink what we thought. Thank you, Kathy.
All Millionaire Next Door talks all about
AGM.
that. That's what Liz DeRocco says.
Oh, the Millionaire Next Door. If you don't know, it's on my shelf. I saw it today. Friends came by. They borrowed some books. Didn't borrow this one, but when I first read that one, early days, I'm talking about, I probably read this when I lived with that cat. That the average millionaire in our country, Thomas J. Stanley, whoever wrote that book, has a business. They own a business. If they own a business, they can dress the way they want to.
Right.
And they've been in their committed relationship for 20 plus years. They got 3 kids. They work. They save. And that's how you become a millionaire. You do the right things with your money. You marry the right person. You wear what you wear. If you got a junkyard, you ain't wearing no tie.
Right.
And we know a very successful entrepreneur in our area, and he wouldn't know how to spell that word for $1 million.
Yeah. But
he would never call himself an entrepreneur.
Yeah. But he got it.
But he's got it.
That's crazy. Yeah. And we've talked about this before. Like think about the like blue collar workers, your plumbers, your electricians, the people. I mean, some of those they make way more money than
so much money. They make more money than me still.
So much money. Do you know how much money they make? And they literally don't pull their pants up. That's the stereotype of the industry.
So what's crazy is I don't know. I didn't read HM comment like this, but we're going down a path and we're going to stay there. We got the mic. But at my high school homecoming event, I would dare say one of the most successful dudes that I went to high school with barely graduated. This dude's almost legally blind as well. And I promise you, this cat is rolling and he does concrete or something. Blue collar.
There we go.
Yeah.
Nelson
It's
Hollins
obvious.
wants to know how he can speak to me. Nelson, you can talk to me anytime you want. Just kind of follow the instructions that we've been saying so far. Click the link in the bio wherever you're watching. If you're on Instagram, click the link. If you're on YouTube, oh, this is a YouTube comment. Click the link in the description. You'll be able to book a call. When we see your name pop up, Nelson, I'll be happy to talk to you. So if I'm not mistaken, I think that Vincent Price just booked a call.
Love it. Okay.
And he's gonna. And so Vincent, you're talking
Have
to.
HM booked a call?
We don't know. HM
wasn't-
got scared away because
I wasn't
Jonah
looking
was
at
like,
everybody.
well,
I just
then
saw
I went
Vincent.
down to
I just saw Vincent.
yeah.
Pop
So
up.
Nelson,
Vincent, you're
yeah.
talking to Jeremiah. So Nelson, you want to talk to me?
Yeah.
That's no problem. I got you loud and clear, man.
Okay,
Just
he'll
book the
find you.
call and we'll take
because-
care of it.
I've talked to Nelson a couple times,
Oh,
so
have
he's
you?
trying to talk to you specifically.
No
yes.
worries. I got you,
promise
Nelson.
Yeah.
I'll talk to you, man.
Okay, he's done with me. He's ready to move on. Okay, ladies and gentlemen, remember that in 2025, if you want a better today, you need to have a bigger future. You need to unthink what you thought. That is the comment and quote of the week. Thank you to Kathy Lejour in north of Nashville.
Nashville.
I was saying Dallas from earlier, Mark Cuban.
Yep.
And then Easton, Florida. I don't know what I was gonna say,
I
but
know
Sean,
you just making stuff up. Pensacola, Florida, got all that snow a few weeks
West
ago,
Florida.
last week or whatever.
Can you believe it?
I know that's crazy to me.
and we are looking forward to having the conversations with you for your family's financial future and to get out of the bonds that you're being held back by. When we are talking about infinite banking on this cash coaching hour, we are talking about a culture of cash flow. And we can set that up guaranteed in a life insurance contract of all crazy things. It's got to be custom. So it's not something that you can find on the website or going to your local agent. But our agency, the Cash Compound, we, Banking Bros coaches, Sean and Kathy, have conversations with people to set them up for the use of leveraging out of the gate.
That's right.
No risk. No taxes, just guarantees. So if that's what you are thinking you want to explore, let's get on that call very soon.
I love it. From Surge Pro 11 wants us to go a little deeper into interest. Nobody wants to pay interest.
Okay, let's do it real quick. We have a couple minutes left. Sean, why don't you go deeper into interest? If we're borrowing and leveraging this money that we were talking about in Infinite Banking Insights with Kathy, tell us how this interest works. Is there interest? How does it work? Who's getting it? How does your policy still grow then?
Yeah, definitely. So what you guys got to understand is, one, there's no free money. Whether you think, well, I already have the cash. What if I just spend my own cash and don't loan other people's money and use that?
One free
Then we're
work for
getting
it.
into opportunity cost, and you had to trade time for it, just like Jonah said. So the general consensus out there with interest rates, the majority of the companies that we use, you're looking at about a 5% loan rate. Now, big thing here, something that you want to focus on is we're talking about simple interest. So just to give you guys a super easy example to follow, if I loan $10,000 from the cash value of my policy and I pay $0 back for the entire year, I would owe $500 at the end of that year or at the end of that policy anniversary date. So one, we're able to get access to money at a much lower rate than most places. And two, we're talking about simple interest. So depending on how you're structuring things, if I'm taking that $10,000 and paying off a credit card, let's say, for example, something I've done, well, I was paying that credit card a certain amount every month. I'm now taking that money that I was paying to my credit card and funneling it back into my policy to pay that loan back. So I maybe took a 25-30% loan that I was paying. I paid it off, and now I'm dealing with a 5% simple interest loan that I'm paying back to myself. Let's say I pay that $10,000 back before the end of the year. What I did was I didn't actually pay $500 in interest. That's what I would have paid if I didn't pay any money back.
Yep.
I was paying down a $10,000 loan throughout the entire year, which means the amount that I owed was going to be drastically decreased by the time I ended up paying that full $10,000 back. So again, people are always talking about, well, rate of return, how much money am I getting, all of this stuff, and they're missing how much money is going out that they're sending to third parties that infinite banking can help you recapture by just paying off high interest debt and paying yourself the bank back. And then, of course, we like to pay ourselves a little bit extra because we're good bankers and we want our policies to grow. So 5%, 30%, whatever you want to do, it's completely up to you.
I love it. What an answer. Man, we've got some other questions that are coming in. Juju, I see your question, but we are just a little bit out of time. We're not.
Come on now. I'll take it a little bit. We got to
get Juju's question. All right.
Juju says, please talk about how money laundering works. You're going to get deported. You're going to get deported. Trump is coming for you, is what I'm saying. That's the answer to the question. See how quickly I got there? We're still at the...
I got a little boy named Juju. That's not his real name, but that's what we call him. So I like you, Juju. Thanks for joining.
Okay, so money laundering is something completely different. It's obviously illegal, and that's when
is washing the money the same as money laundering? Is that the same thing?
I think it's the colloquial term.
Okay, gotcha.
Do you do that in your?
I don't know.
I think they do it in the washing machines.
Okay.
I don't know. I don't do it.
My dollar's crispy. I don't want to wrinkly.
It's true.
Right.
Get out of here.
My money.
Get out of my wallet jiggle. If you're going.
It folds.
It crinkles. Okay, ladies and gents, appreciate you being with us, and join us on our Infinite Bankers page on Facebook. We have a community group, private group behind the wall of the Cash Compound page called Infinite Bankers, and we get in there and ask questions of you and give you scenarios and updates and best practices of what people in our community are doing.
That's right.
In the world of infinite banking.
We asked a question in there. We got some responses, but we'll talk about that next week. Same time, same place next week. So that is Thursdays at noon Eastern. And we're going to be live. We'll be live again. We'll talk through all of your questions. We'll answer anything and everything we can. Sometimes if we have time, we'll go through all of our social medias. We'll pull up questions. We'll ask questions. We'll get answers. We'll just keep going. So if you liked what you heard or saw in this last hour, join us again next week. Thursday, 12 noon Eastern. We'll be live again next week.
Peace out, everybody. We suggest you save your money and spend someone else's.
Now tuned to the banking bro. Said we couldn't make it. Drink or settle. This the life we chose. Gave a lot of game. We never got a lot of things. Bow your head and say the prayer. We taught you how to be the bank.